We're here with Congressman Brad Sherman after his speech at the Governmental Affairs Conference sponsored by CUNA. Thanks for taking some time to speak with us.
Good to be with you.
First, I wanted to start by asking you about the credit union tax exemption. You said during your speech you're committed to protecting that. How do you think credit unions can face the opposition? Any advice for them in facing the bank opposition to the tax exemption?
Both grassroots and back room. Grassroots, energize your members. They should understand that they're directly affected. The ability of their credit union to serve them and the ability to serve them at reasonable rates, whether it be on the lending side or a CD, that's at stake here. The back room is we now allow at least dynamic scoring. So estimating the economic effects of a tax change is subject to a whole variety of different possible interpretations. So get the best interpretations. Make sure that you're taking a look not just on the effect of the corporate income tax, but then what about the individual income tax? And show that the net revenues are not the $3 billion a year the banks are going to claim, but maybe $500 million a year. And realize that your opponent is not just the banks who want to see you taxed, but everybody who wants a $3 billion a year tax break is being told by the banks, God, your tax break is just great, and you ought to get the $3 billion, even though there's only $500 million. You ought to get the $3 billion from the credit unions. So it's a matter of showing Congress that allowing this tax exemption is a very low-cost way for us to encourage the good work that credit unions do.
Now, on the supplemental capital bill, what obstacles does that bill face for passage this time in this session of Congress?
I know this will come as a shock to you. Banks don't like the bill, which is odd because they were the beneficiaries of a truly revolutionary approach to generating capital, namely TARP. Federal government puts in capital. Here you just want the federal government to get out of the way and let you generate as supplemental capital from investors in the private sector. So I think that we can. It'll be difficult. If it was easy, it'd already be done.
I also want to.
And the other thing I want to say is we want to tie together supplemental capital on one hand and member business lending on the other, because without the capital, you can't expand into member business lending. And the one thing you got to understand is we're all all members of Congress, the civic and business lives of our communities. We are at more Chamber of Commerce events than you know exist. And your members are going to them, but we're going to more. And every single day, somebody tells me they want to expand and they can't get a bank loan. Well, they ought to get a credit union loan. And if you can harness the efforts of the small business community, which the members of Congress understand, to have a place to go that will say yes and give them a loan, and hopefully at a reasonable rate, to these two bills, the business lending bill, which is most obvious, but the supplemental capital as well, then you tie it together. Everybody likes a little better service on their checking account. Everybody likes a little higher rate on their CD. Everybody wants to be, I think many members like being members of a member-owned institution. But the make or break for not only a business but its employees is whether they can get that business loan.
And I also wanted to ask you about a CFPB bill that's been introduced to change the commission, or to change the leadership to a 5-person commission from a single director. Is that something that you support?
I'm going to have to take a look at that. I have not looked at it, nor have I looked at how those members would be selected and what each of their qualifications would be. There was a lot of talk about that 2 or 3 years ago, and I haven't thought of it for a couple of years.
It was brought up again recently, and then they had the hearing. Financial Services Committee had the hearing with Cordray recently. Another issue that came up during that hearing was the payday lending action that the CFPB is considering. Are you concerned about them getting involved in payday lending? And what do you think about the Chairman Hensling, saying that there are a lot of states that have adequate protections for payday lending, and why does the CFPB need to be involved in that?
I think there's a role for the CFPB in payday lending. At the same time, the goal, we've got to make sure that we don't cut off that. You see, people get involved in public affairs because they're already able to take care of their families. And then they say, I have enough extra, I can contribute to the community. I can afford to live on the measly wages that Brad Sherman provides in his congressional office. And so the people involved in public affairs are not people who are living who don't have an extra $700 to fix their car. If they didn't have the $700 available to fix their car, they'd be focused on their own economic situation, and they wouldn't have the extra time, the extra money to be involved in public affairs. So many of the people making the decisions don't ever need a payday loan, and don't understand, well, God, you work out the percentage interest rate. Isn't it terrible you paid $50 to borrow $400? Well, not if it keeps the lights on in your house. Do you know what the fees are to get reconnected? People in public affairs don't know. People in who are in the political world, they've always got the $400 to pay their light bill. If they didn't, as I said, they'd get into something a little more lucrative or a little less time consuming if it's a volunteer activity. So there needs to be a way to get the loan. And that doesn't mean that you need to have a situation where the same person renews the loan 26 times in a single year, because then it's no longer a service. My hope is that credit unions will fill this space. If there's any area where you move in and you provide a better deal because you're a nonprofit member-owned institution, these are the people that need credit unions the most. They need credit unions to encourage savings, because once you get $1,000 in the bank, you can be, or in this credit union, you can be your own payday lender. I want to encourage people, if somehow get $1,000 in the bank, and every time you take $500 out because of an emergency, put $540 back in. And if you do that, you'll be in a position, and it's hard. My wife and I talk about money and spending, but we have to keep reminding ourselves we're raising a family on an awful lot more than the average American.